So as we know, everybody's very concerned about the current interest rate. But y'all, you've got to think outside the box. What are some ways that you can save some money? This is Peggy Brown with Virtual Properties, and I'm going to provide you with 5 tips today as to ways that you can potentially save money on your monthly mortgage. Tip number 1. If you're a first-time home buyer, don't forget about the Georgia Dream program. This program has down payment assistance and can offer up to $12,500. Tip number 2. What about considering reducing the number of years for your mortgage? Now, this one might be tough because if you go from a 30-year mortgage to a 15-year mortgage, your mortgage payment is really going to go up. But bottom line is, when you look at how many thousands and thousands and thousands of dollars you're going to save, you might try to figure out a way. And if your pockets are deep enough and you can handle the monthly payment, I strongly suggest you go with a 15-year mortgage instead of a 30-year mortgage. My third tip. Why don't you consider owner financing? Now, this one, the chances are much slimmer for this opportunity to become available, but it might be out there. If you are looking to buy a home and you find out that that home is owned free and clear, it might be worth having your agent inquire if the homeowner is interested in doing some owner financing. They maybe don't need the money to move on to the next plan for them, whether it's to buy their next home. So maybe they would like to pocket some interest. Instead of you paying the bank, you'll pay the interest to them. Deals are set up the same way. You still have all the same legal requirements that you do when you deal with a lender, but owner financing might be one way to go. The fourth tip I want to share with you is potentially buying down your interest rate. This has become very popular right now, especially with new construction, because with new construction, they're offering you a pretty good amount of closing cost assistance. And so if that's the case, maybe you'll want to utilize that money in buying down your interest rate. Or maybe you've got enough cash saved up that you can buy down your own interest rate. Because remember, we're marrying the house and only dating the interest rate. So keep that in mind. And my fifth tip is, why don't you try to increase your down payment? If it at all possible, see if you can come down with at least 20% down. Y'all, a lot of folks don't realize when you have less than 20% down, you have to pay what's called private mortgage insurance. And that can run you $100 to $150 a month, if not more. Why pay that extra money if you don't have to? If you can figure out a way to save enough money to put down 20%, I certainly would give that a try. I hope you enjoyed these 5 helpful tips. This is Peggy Brown from Virtual Properties. Tune in next time for more help.